In this video I'll show you how bottoms and tops form, how you can spot and trade them. I will show you this primarily with crypto, as I trade more Wyckoff theory in crypto than I do with Forex. But of course it will work in any market like stocks, indices, Forex and crypto. I will show you how you could have stepped into the crypto before big breakouts at the bottom and how you could have stepped out right at the top. At the end of the video though, I will show you how I do use a more simpler version of Wyckoff to trade Forex reversals and pullbacks to prevent you stepping way early or at the wrong spot, and how to not get chopped up by the market. So make sure to stick around. Okay, so let's start with the 4 phases of market cycles and work our way towards Wyckoff theory and then entries. So first you have the accumulation phase. This is a sideways market. In this stage, there is always some form of Wyckoff theory going on. Order blocks and break-off structures are not the best thing to trade here if you do not take Wyckoff in account, as liquidations and false break-off structures is what happens a lot in this stage. Most people get chopped up here, so if you do not know the ins and outs of Wyckoff, I would suggest to just stick to the next phase. By the way, I've just uploaded day 2 of a series of me taking a 80,000 euro challenge. If you want to see that, you're free to check it out. The mark up and mark down. This is your friend, also known as the trend. This is the profit phase where people that successfully bought the accumulation phase are now profiting from those that got shaken out at the accumulation phase. And in reverse, the markdown is where people profit successfully from selling the distribution phase from people that bought the top. This is where order block and break structure trading shines. This is also what I currently only trade in Forex. Although I do trade some kind of Wyckoff in the pullbacks during a markup or down, which technically is not really Wyckoff as it's not a complete top or bottom, but same things happen when forming the completion of a pullback as in completions of tops and bottoms. Mind you, the market is absolutely brutal. For every win, someone else needs to lose. And if you think about those massive 10, 20, 50x gains that are possible in crypto, or 10, 20, 50R trades in Forex, imagine how many people need to lose to realize those profits for some people. There is just a very small percentage that actually realize those gains, logically speaking, because the people that profit those kind of numbers usually also do it with more money than those that lose. Then imagine how many people have to lose for one person to win. It's crazy to think about it, really. Alright, enough about that. Hopefully it will have woken you in some way, because social media is showing you either a lie or making you think the success rate is way higher than it actually is. It's not to shatter your dreams, but to make you realize you need to put in the work if you want to make it. Alright, let's now zoom in on the accumulation phase. As I said, this is where always some form of Wyckoff is taking place. So when entering the accumulation or Wyckoff phase, you need to understand that this is a place where smart money is getting out of their shorts and entering for longs. Now, and because smart money moves the market, they know collectively where to buy and where to sell. Otherwise they wouldn't be in the market with large sums of money, right? And because they have so much money, they can't just buy like we can without impacting the market. They want to be on the radar, because if they just buy, price pumps and the dumb money will just jump on that like hungry little piranhas. And you have 2 problems right now. Smart money cannot enter their entire position, or they have to buy really high and nobody loses, which is theoretically impossible. So what do? They hunt stop losses. Price dumps while they buy. Nobody notices and loads of people lose money. Both problems solved. This happens throughout the accumulation phase and at the most important or most discussed point in Wyckoff, the spring phase. This is the last big liquidation. A lot of times this is the lowest point, but it can also happen a little higher. Now, especially in the crypto, the big boys, smart money or whales, however you want to call them, they have a special recipe for adding gasoline to the fire. They make sure everybody gets in at the top to be distributed on by smart money, and to make sure everybody sells at the discounted prices for smart money to accumulate from. What is that recipe? News. Let's quickly go over some big points in the crypto cycles. Bottom of 2018, don't you dare touch Bitcoin. It's criminal money. It's bad. The top of 2021, Tesla is buying Bitcoin. Wow, this is great. And right before the distribution dump, Elon Musk goes live to talk about Bitcoin. And right here, El Salvador tells everybody to buy $10 worth of Bitcoin, and then it dumped. Bottom, Celsius collapse, FTX collapse, Luna to zero, all happening at the bottom. Everybody is scared to death. As we enter into the accumulation, we end the markdown with the selling climax. This is the point where we see heavy volume to the upside of early buyers, but mainly shorts closing. This is why the end of the markdown is followed by an automatic rally. Because of this relieving rally, people will jump in thinking that that was the end. And they are kind of right, but have no idea how long the accumulation is taking place. For crypto that was about a year, but the big boys haven't even had time to step in. So they let it bleed out and hunt for the stop losses that are collected at the low. The big boys will happily buy all of it right there. So again, a short rally will follow. Then we either get a really drawn out period towards the last point of support, or the spring phase, where we see one more and final low. And that would be the end. Price will break out of the range, backtest that range once more, and the markup starts, or phase E, and WYCKOFF is completed. Now obviously this is really complicated and most of the time this won't all happen, and spotting these things while they happen can be a challenge, so I like to make it a bit simpler. Usually the markup or down consists of 5 waves, Elliott waves. I won't go over Elliott wave theory in this video, but to give a quick summary, in trend or mark up and down conditions, the entirety of the move happens in 5 waves, 3 thrusts and 2 pullbacks. This might help to spot potential endings of moves. When that markup or down is completed, you will have the big bounce, the automatic rally. This is where beginners jump in as they see it as a break of structure and expect the price to reverse in a straight line. But what happens is a lower low in the accumulation phase most of the time, followed by one more low. Then a bigger reversal can happen, resulting then in the potential straight move up, leaving a lot of people behind. But in most cases, sideways action. A very important ingredient for spotting tops and bottoms. Don't just try to jump in at the first break of structure you spot, but wait for the market to go sideways. This is the moment you have to be patient. Now there are some things you can backtest as well. For example, try to spot the markup or down and count the amount of liquidations after the automatic rally. Make a log of it and see for yourself how many times you want to see liquidations in the accumulation or distribution phase. Let's say for an example you look for the automatic rally followed by 2 liquidations, and then you enter on the hold of that last liquidation. So here you can see we were in a downtrend and now we are starting to move sideways. So now we're waiting for an automatic rally, and there you go. It broke this structure with some pretty volume. So now we wait for the liquidation. That is the first liquidation right there. So now we wait for the second one right there, and that would be our entry. So you could do something like this, and there you go, it starts moving, and there you have the markup again after an accumulation WYCKOFF. So what I do is I just wait for that sideways action and then wait for a liquidation followed by a big volume break of structure, and then I enter so you can write the markup or down.